when it goes above that 50, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1 that historically we were. These were both, well, it's peace dollar. Okay. These are both $1, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce.
I want to talk about the issue of gold revaluation, because this is something that's kind of re-entered the consciousness of stackers recently due to the fact that the Fed released a paper examining gold revaluation in other countries and its impact. This has led a lot of people to speculate that the Fed is considering a similar move, currently valuing their gold at $42.22 on the balance sheet. I've heard so many different opinions on this. Some people say it'll never happen. Some people say it has to happen. Some people are more in the middle. I wonder what your thoughts are. Is this a realistic proposition to revalue U.S. gold reserves? What would it actually accomplish for the U.S. government? And what could its wider implications be on the gold market?
Well, I personally do not see it. I see it as inevitable, because what gold really does is it regains confidence. I mean, they want us to think that gold is an old relic, except wedding rings are generally in gold. Good as gold. It's in our vernacular. It's in our DNA, and it's used to regain public confidence after that massive failure, which I believe we are like this close to experiencing, and the hyperinflation. But make no mistake, every single country has a gold revaluation account. They're not going to do it at these levels because it does not reflect all the paper money that's been issued. So what I think we will see, and it's just a repetition of history, because this has happened over 4,800 times. I don't think this time is any different. And that's really what the point is. But they have to, you have to kind of back up to move forward. If they did it now at the artificial level that the spot markets are, then it wouldn't have as great an impact if they wait until they finish blowing up the currency in a bout of massive hyperinflation. And what they do then is, of course, they lop off zeros so people think, well, they've got this under control. So you've got a loaf of bread. And I know this sounds outrageous, but it's not outrageous. It is just a repetition of history, where a loaf of bread might go for, as it enters hyperinflation, a loaf of bread might go for $80,000 a loaf, right? But then what happens? They lop off 3 zeros or 4 zeros as they do that overnight revaluation. And so it goes from $80,000 a loaf to $8 a loaf. But so do your savings, and so to anything that you've accumulated in fiat. And frankly, so will the nominal price of gold. First, it'll go up massively, right, in the hyperinflation. But the difference between, say, your stocks and everything else, that drops dramatically immediately upon the revaluation. Whereas gold, it's on average, so I can't guarantee this, but on average will stay up at that level for about 9 months before it too gets revalued, but then it instantly begins to climb again in terms of that new currency. So that is what I anticipate seeing. I don't anticipate seeing it before we do hyperinflation, because there is not yet the need to regain that public confidence. But I watch that like a hawk, because that, my friend, is the only thing that's keeping all of this stuff together.
Well, speaking of trying to keep things together, the Genius Act, stable coins, these are two things that you mentioned before we hit record today that you've been watching very closely. Walk us through the basics of what the Genius Act is and why you think the US government has introduced it.
Well, the Genius Act is the first legal foundation for cryptocurrencies and stable coins in particular. I personally believe, I mean, there are many reasons why this administration made the choice to legalize that. I mean, there's definitely stakes in the game, but it had to happen anyway because we're moving into a new digital system. And what nobody really realizes yet, and I'm so glad I'm old because I've lived through this and I know how to recognize it and I've studied it since 1987. When President Trump signed the Genius Act, he changed the global monetary system. And I believe that, and you know, I'll put my technical neck on the line with this. I'm not even giving myself any wiggle room in here. Although, of course, I will say I could be wrong, but from the tip of my head to the bottom of my feet and every single area in between, I believe that this will now usher in the hyperinflation to burn off the debt that's being created. But make no mistake at all, when he signed that, the monetary system changed, period. Now, the fact that most people don't know about it yet is not relevant, but I was there in 1965. I was about 11 years old at that point, so I didn't really understand what happened, but I remember that period of time. And I was there in 1971 when we went off the gold standard. And I remember I was about 17 years old. So I definitely remembered all of the chaos and everything around that currency regime shift. And there is not one doubt in my mind that we just experienced that a couple of weeks ago or 3 weeks ago, whenever he did that, the beginning of this month. And that was about, look, this is the way I view President Trump. He is a change agent. This change had to happen because we have used up all the purchasing power value in this stuff. And once you do that, there is no place to inflate away. You must attack principle. But since at the same time, what's been happening is a shift in the allegiances on a global basis. So the rest of the world has, as we know, they've been turning away from the US Treasury market, which is the foundation of the global financial system. Well, when one market goes away, they got to find a new one. And so by legalizing the Genius Act and requiring all of the stable coins, at least that are issued by this country, to be dollar backed 1-to-1, what he's done is created a new artificial market, just like Kissinger did back in the 80s, 70s and 80s with the petrodollar. So that's what he's attempting to do. And right now, according to a recent article, think about this because it's crazy, right? But in a recent article by the St. Louis Federal Reserve, they talked about the impact of the stablecoins. And right now, there's about 125 billion stablecoins in this market. And most of them, it could be, I don't have this number in front of me, but somewhere between, I think it's even 99% of currently all stable coins that are issued are dollar based. And they've been adopted majorly in third world countries, particularly in Africa, where their currencies are experiencing very, very high inflation. So what he's done is he's made sure that every new stable coin that's going to be issued by any corporations in the US, because that's who issues them. We don't want CBDCs here. Okay, well, I'm pretty sure we don't want stable coins either, but the CBDCs have a central location and there would just be one per country. The stable coins are issued by any corporation. So we'll have Amazon stable coins and Walmart stable coins and Kmart stable coins and, JC Penney, as well as JP Morgan, as well as Hong Kong stable coins, the yuan stable coins. So it is an extraordinarily fragmented market, but they are thinking that within the next 2.5 years, by 2028, they will go from about 125 billion stable coins to $2 trillion in stable coins. And they are busy creating the legal framework of safe harbors and exemptions and all of these things. So if I take you back to 2008 and the great financial crisis, where what these bankers did was disgusting and vile and cruel and destroyed so many people's lives, nobody went to jail. And they didn't go to jail because legally they didn't do anything wrong. Ethically, it was horrible, but legally it wasn't. And they're setting that same kind of system up now and encouraging all of this experimentation. And guess who's the guinea pigs? And guess who's just about the right size to fail? But that's also why I say that this is what's ushering in the hyperinflation, because the easier and cheaper it is to create new money and spend new money, the more will be created, the more will be spent. And really, how do you even value any of these cryptocurrencies? I mean, if they do a physical representation, because that's all this is, these aren't Bitcoin or Ethereum or XRP. They are the physical representation. And I find it so interesting that they make them look like 1 ounce gold coins. Psychological.
Yeah.
And disgusting.
Very fascinating. Yeah. And, inflation is theft. And when theft is made legal, you are being ruled by criminals. That's the situation we're in. Governments are essentially criminal cartels that have legalized their own crimes. And the bankers and central banking system is a huge part of that. The fact that people have not woken up to that en masse is a little disheartening. A topic we're going to get into a little bit later. But first, I want to highlight something you recently posted on X. A possible shift in the composition of the Fed's portfolio of Treasury holdings could result in the central bank buying nearly $2 trillion of bills over the next 2 years, according to Bank of America. You then added the hashtag #GotGold. Are we looking at Japanese-style yield curve control up ahead, where the Fed could end up being the main buyer of U.S. Treasuries to try and keep yields low?
100%. So, but now think about these numbers, right? If you've got 2 trillion coming in through stablecoin issuance and the Fed doing an about face onto their balance sheet of 2 trillion, that pretty much covers all that new debt that comes out in that big, beautiful bill, isn't it? Doesn't it? It's just to keep the game going, and they can, as long as the public maintains confidence in the system. Because bank-to-bank confidence, that ended in 2008. Central bank to central bank confidence, and if you want me to go into any of these in more detail, but that ended in 2015. Market to central bank, remember that they would tell the banks what they're going to do. Forward guidance. We're going to tell you what we're going to do so you can get into position. But that ended in 22. So there's only one layer of confidence that's left in this system, and that's the public still hoping beyond hope that this can regain some of its value. That's hopium. That is not a good plan. And it doesn't really work either, because the cards are stacked against you.